Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. We have a special guest on today's recap. Steve Levay, a mentor in the Trade the Morning mentoring room, is going to join me on the recap, and we'll get a little bit of his perspective on trading and on the recent action in the market, and talk about some setups and stocks that he's been trading recently. So welcome to the show, Steve.
Thanks, John. How you doing, buddy?
Doing pretty well. How about yourself?
I can't complain. It's a Friday. No problem whatsoever.
Well, you posted an article this week on the T3 Live homepage talking about the Trade the Morning lifestyle in addition to the benefits of the strategy. And we were talking about doing this recap video, and you told me, hey, can we do the recap a little bit early? My kids are getting home from school. I got some stuff to do. And I just thought it was very fitting given the topic that you wrote about in the article about how the benefits that do exist because of the Trade the Morning strategy and the fact that you focus so much on the first 2 hours of the day.
Yeah, I mean, I'll tell you what, John, even on a bad day, being able to pick the kids up from school and just, do whatever I want to do, as long as I make sure that I cover the first 2 hours of the morning when I believe that the true volatility is there, then I'm okay. If I don't have a successful day, so be it. I still go along with my business, and I can do all the normal things that I normally do. Like I said, pick the kids up from school, go out and go for a nice run, even go golfing with a friend if I want to. So
yeah, I thought your take was very interesting. The way you talked about it is that the lifestyle is not the reason why you use this type of strategy. It's just a byproduct of the fact that the first 2 hours of the day is where all the action is. It is where the volatility is. It is where you're able to manage risk and really have that liquidity there that you need to trade well on a short-term basis. I just thought that was a very interesting take.
Yeah, I mean, I'll tell you, over the 13, 14 years that I've been doing this, I realized, I go over I have a report card that I look at on our system all the time, and I noticed, over the last year or so how different my afternoons were from my mornings, and I made a lot better trades and a lot more money trading the morning than I have. I've turned a lot more of that profit in the afternoon as I went over my report card. And, Mike and I decided, that we would brand this room Trade the Morning just because that's where we're finding the most successful setups and the most successful volume, for lack of a better word there, where the setups will occur.
All right, well, let's go ahead and jump into some market-related issues. Right now, the market's not closed yet for the day, but it's been another chop fest. You've heard a lot of traders talking recently about the frustration that's occurred because of the fact the market's had no commitment to the upside from a day-to-day basis. But as a Trade the Morning trader, as a short-term trader, you generally don't take risk overnight, and you're coming in every day with a clean slate. So if you've been experiencing the same type of frustration that a lot of, I guess I would categorize them, swing traders have been feeling, or do you actually like this sort of intraday volatility that we've been seeing because you're not sticking around for those round trips that are occurring intraday?
I'll tell you what, I definitely sleep better than most swing traders do because I don't have the stress of the overnight game of hoping we don't gap down 20, or if I'm short, hoping we don't gap up 20. I come in with a clean slate every day, and, I take what the market gives me in the morning, and that's how I make my day. Whether or not, a stock might move 20 points when I'm away from my desk, so be it. I'm not taking that risk away as I'm walking away from my desk. I'm not taking on that risk unless I have a stop set out. But generally, I am flat come like noon. And, yeah, I'll make some trades every now and then in the afternoon where I see fit. But if I've hit my goal in the first 2 hours, 3 hours of the day, I'm perfectly content with sitting back and waiting for tomorrow to come and sleeping nice and soundly like I have been recently.
We posted an article also today on our blog, one that Mike Lee put together with some of my input as well, talking about how while you guys are traders, you really don't care about what the stock market is doing, quote unquote. And what I mean by that and what he meant by that was that he doesn't care necessarily what the spiders are doing. There's been much made about how the spiders have been holding up and the Qs have been weak and the IWM has been weak. I know that you guys probably look at indices very slightly to maybe get some ideas on trade direction and stuff like that. But he was commenting that he just doesn't really care about whether the market's been choppy or whether the market's been in an uptrend or in a downtrend. He's looking for individual stocks that are in play, that are volatile, and that are providing the type of range that you guys need to make your living. Will you comment a little bit on that topic?
Yeah, I think the beauty of our Trade the Morning room also is that we never truly know what we're going to look at tomorrow. And by that I mean I don't know what had earnings, I don't know what had news, I don't know what got downgraded, upgraded, so be it. I have my basket of, say, 10 stocks that I will trade all the time. But as you know, John, based on the fact that I send you my watch list every morning, the watch list generally changes to what is in play for that morning. And like I said, the beauty of that is never really knowing where my money is going to be made the next day.
Well, let's get into a few of those names that I have noticed on your watch list have been pretty consistent. And there's a theme among all those is that they move. They have volatility, they have movement, but they're not ones that are these the Apples, the Googles of the world that are so saturated with, maybe black boxes or big institutional traders and stuff like that. They're ones that they're not necessarily thin, but they're not so thick that you can't maneuver in and out of them. And the first one, and talk about volatility today, is a name Grubhub, which also owns Seamless. They're the online food ordering services, and that's one that I saw you had traded today and had a huge range, about a 15% range or so today.
Yeah, and I have the chart of Grubhub right now, and for those who are in my room, we had at least 2 or 3 good setups in this thing over the first 2 hours of the day. The first one is the nice 5-minute high trade right here. The stock was generally, it opened down right around 32.64, and the high of this range right here was 32.95. And once it got through 32.95, you look at the next bar, it got all the way as high as almost 35. So that was a great 5-minute entry right there. And this tail kind of signified that it might have been a topping tail kind of thing. And again, you don't know 15 minutes in, but what it did was it came straight down, made new lows on the day, tried to recover, and then it built an H pattern, or what I like to brand, if we have the Red Dog Versal, I'm going to call this the Levay right here. So we have this H pattern right here. And basically, it took a while to set up. You have that beautiful lowercase h, and then it took about another 2 hours. But we did get a little break right here, and then another retracement, and then it broke hard later in the day. So this was a really good trading stock. And when it's in play, it really is a fun stock to trade because you don't really have an idea of what it wants to do, but it gives you great range. So as long as you have good entries and you have good stock, this is a very, very good stock to trade when it does some volume like it did today. It has 1.2 million, which is generally very high for this stock. But like I said, this good entry here and then a break of the H for another good entry gave you a decent chance to make some money with this one today.
Yeah, that one had 2 of your primetime setups that you talk about in your Trade the Morning course in the 5-minute high-low setup and also the H pattern. So that's a very good example of stuff that you guys have going on in your room. FireEye is another stock that I know you mentioned that you've been trading on and off. Not really today. I don't think you traded it, but it's
right.
One that, from a macro perspective, some people I think maybe were trying to catch a falling knife in this one over the past 2 months or so. But as a short-term trader, you're just looking for stocks that are in play, that are volatile, providing movement. And FireEye can definitely not be accused of being dull or not moving at all. Definitely big percentage moves in that name. Go through a little bit how you've been approaching FireEye.
Yeah, I mean, definitely. I'll tell you what, the day before earnings, I said to Mike, and I laugh at this now, but I said to him, you know what, this is probably a great risk-reward buy going into earnings. I mean, the stock has come down 60% basically from its high over the last 2 months, or not even 2 months. Yeah, 2 months, right beginning of March. It was at almost $100. And I said to Mike, this might be a good risk-reward. I didn't do anything with it, thank goodness, because as you see, this huge gap down here. Now, what I've got on this 5-minute today is a lot of dreck, basically. I mean, there is no true bounce in these high momentum stocks that have gotten slaughtered. And as you see, this one set up kind of like it looked like, if you look at this here, you could have said to me, hey, Steve, it's setting up a little bit of a bullish pattern. But what I'm seeing is possibly more of a rounding here. Doesn't look very super bullish to me. And what happens as the day goes on, it makes new lows on the day. And right now it's currently at 26.50. I mean, John, I got to be honest with you. I'm amazed at the fact that nobody's stepping in to even defend this thing. This is setting up. I can't tell you when the bottom's going to be in, but if you get an upgrade on it or something, there'll be a nice tradable setup at that point. But right now, trying to catch a falling knife in this thing, it wouldn't surprise me if this thing was in the teens in the next week or so.
As some people say, it could at some point be a hat size, 7 3/4, 7 1/8, something like that.
Yep, I agree.
Anyways, Zoolily is another name. Talk about volatility. This one's been extremely volatile, and I read something before we came in to do this video that Zoolily You saw Twitter have its IPO lockup expire, and it led to a huge down move. Zoolily, 88% of the total float is going to come unlocked here soon. I can't remember the exact date, but that's obviously going to change the dynamics of this stock big time, and it's already gotten punished prior to that. So I think this is one that's been on your radar and definitely probably will stay on your radar in terms of providing volatility in the morning.
Yeah, I agree. And again, let's go to the daily on this one as well. Again, this stock, the day after earnings, Kramer came out and pumped it. The stock went from, I think, 48 to 75, and it's just come down nice and slow. Well, not nice and slowly, nice and steadily since then. For me, this kind of stock is going to stay on the radar. Yes, we're looking for a short-term bottom in it, and I'd be honest with you, I thought this might have been a short-term bottom right here on the daily here at 30.56, and it's still holding that range right now. But a break of that, we're talking this stock's probably going to go in the low 20s, and then it's going to need time to set up. These are not the type of stocks that I'm going to say to you guys, this is got to be a buy setup here. These things need time to base and reset up charts. This is as broken a stock as you're going to see right now. I mean, when you're talking a stock that's come down 60% over a month or two, you know, you've got to be patient with these. You can't just say, well, they loved it at 70, I'm going to love it here at 25. Guess what? It may be a teenager as well. I mean, these are the types of things that we generally stay away from opinions on. And again, this gave you a decent 5-minute high right here. Here's your 5-minute open. Gave you about $1 and change off the open, and then it kind of flatlined. But as you see what happened, now I like to base my opinions because these two stocks have generally traded like each other between FI and ZU. When FI got crushed, guess what? ZU did the same thing later in the day right here, and it fell pretty much $2 after basically setting up all day. So there is no real buyers in these stocks that have gotten crushed. And for anybody to say, you know what, this is a great buy down here, you're going to take a little bit of pain. I can honestly say that. I think you need to be patient with these types of stocks. When they get beat up like this, let them base for a few weeks, maybe even a month, and set up some sort of pattern that gives you the edge. Right now, there is no edge to the upside on these, and I can make an argument that if you're looking at these stocks and you're not shorting them, you're going to lose money. And that's, you know, obviously not, I can't prove that, but based on what I'm saying right here, you know, you can't come in here and say, I'm going to be buying this stock on Monday. You've got to wait and see what comes out and how it sets up after the first hour, let's say.
And another Z stock, Zillow, talk about the epitome of a stock that if you're trying to swing trade this, you've been driven to insanity given the size of the ranges that we've seen. But in terms of volatility, this provided great volatility for a short-term trading style that comes in every morning flat. Talk about what you've been doing with Zillow.
Yeah, I'll tell you what, Zillow yesterday had an unbelievable open range right here. I mean, it had a range from 93 to 104 in the first 5 minutes. And when I see something like that, I tend to stay away unless it breaks out a new high or a new low. And to be honest with you, this thing was basically on the inside of that opening bar the whole day. Obviously, this tail right here led to a little bit of selling with right now the stock's at 97. So this is from yesterday on. And as you can see, it's just basically ridden a steady trend line down right here. And the only thing I got to say right now is that generally, it looks a little bearish to me over these last 2 days. You're building a little bit of a descending triangle. I mean, we just broke out of it here. So if we can somehow get over 100 maybe before the end of the day, this might be a decent play to look at on the long side. But overall, I still think there's more selling coming into this thing, right, based on what I'm seeing right here. And even if we get rid of this line and just draw it, you know, from right here, overall, it has to get above 100 and stay above 100 for me to think that this is going to be more buying, maybe a 110, 120 stock, because you're looking at this right now, it's just in one giant 2-day wedge that really, I mean, earnings didn't really give it the push I was hoping it would get. So, you know, we're going to have to see what happens next week with this one, but I need to see it stay above 100 for me to really love this on the long side.
And the last thing we'll go into is Twitter has gotten a lot of attention after that IPO lockup expiration and the big sell-off that it saw. Hasn't really been able to get a huge bounce, and then it's also led to weakness in other social media names, Facebook among them. How are you, to go ahead and do 2 and 1 for us here, Twitter and Facebook, how have you been looking at these as opposed to some the way some maybe more swing-type traders have been looking at them?
Okay, again, Twitter is a type of stock. Again, it's been at $75 before the new year, and now we're down at 30, got as low as 29 and change 2 days ago. This is, again, a stock that I'm trading, looking for 5-minute breakout, 5-minute high low, And today it got upgraded, so it gave you a decent push off the open right here. But as you can see, I guess it just succumbed to the selling pressure, and it's basically flat on the day now after being up as much as, excuse me, like $1.50. So now it's up 20 cents right now. So for me, Twitter is probably, I mean, at this point, if these two tails on the daily hold up, this stock is probably going to make another Levay pattern and come down under 30 again, and then we have to see if it's going to base. I mean, I just don't know if it will. But this is the pattern that it's showing me. I don't like when I see big downside action and all these tails as it tries to go higher. To me, that's a sign that they're still selling this thing up here, and I'm not ready to, pile into this thing on the long side. And then Facebook, Facebook. I mean, today this is the daily on Facebook. This is an ominous-looking chart only because we came down from 74, and we're just in this giant $8 channel right now. And overall, if you scroll back a little bit, the chart still looks really bullish, but a break of this 55 level could ignite a lot of stops getting triggered, and we could probably, if that happens, we probably break right through the 200-day at 53.44. And my guess is the first support will be right around here of about 50. So, I mean, I don't want to see that personally, but that's what this chart is telling me. If we can't get out of the way of the, if we break this low of the channel, my guess is that we probably touch 50 sooner than later on Facebook.
All right, Steve. Well, thank you for going over those charts with us. We want to remind everyone that on May the 15th, I believe is next Thursday.
Yep.
You and Mike Lee, who are the lead mentors in the Trade the Morning mentoring room within T3 Live, you're hosting a webinar after the close at 4:30. The title of the webinar is the top 3 reasons why we love trading the first 2 hours, where you're not only going to explain to people why you believe that trading in the first 2 hours and being less active in the afternoon, why that is the best strategy in terms of liquidity, in terms of volatility, in terms of all those type of factors that lead to cleaner moves in the morning, but also go over 1 or 2 strategies from your course as well. So you're going to get a little bit of the why, and you're going to get a little bit of the how in that webinar. Do you have anything to add about that content or anything to say about the webinar?
Well, I mean, I got to tell I tell all the guys in our room that it's definitely something you want to check out. It's look, I'll be honest with you. Like my article said, I love the way my life is right now. I love that I trade. I love that I have the flexibility and freedom to do as I want to with my life. And yeah, obviously there's frustration in the market, and I get frustrated every now and then, but again, just do yourself a favor and come listen to what we have to say and check it out. It's definitely a worthwhile. It's free, and even if you just learn a little bit about our strategy, forget why we trade the morning, but if you get a little bit of our strategies and a couple of the patterns that we like, I think it's something that you can definitely walk away with your head held high and say, you know what, I picked up a couple good points in this. Great.
All right, well, there you have it. Thank you, Steve. It's a free webinar, so you have nothing to lose. Even if you register and you can't make it live to the webinar, the recording will be sent, but it will only be sent to people who register. So even if you can't be there live, make sure to register. This has been John Darsie, your Editor-in-Chief, here for Daily Recap. We'll see you back here on Monday morning.
Have a good one, everybody.